G'day and welcome to another edition of the Energy Action Market Wrap. My name is John Huggart, the CEO here at Energy Action. So, following the worsening coronavirus outbreak in Victoria, the market has traded lower, especially in 2021. Overall, the market over the past week, there's been modest reductions in all states. If another hard lockdown is imposed in large cities, we may witness further weakness in the market and revisit those lows that we saw back in March. But it's still a very good time to buy and lock in the favourable rates. And the reason for that is that if the current conditions continue, we may begin to see generators leaving the market due to not receiving adequate return on investment. Therefore, rapid price adjustment upwards as a result of reduced supply or increased uncertainty. As I say, prices for calendar year 2021 and 2022 have been stable for all states except for Queensland, continuing to dip lower, even below the $40 per megawatt hour mark, and providing significant buying opportunity. It is noteworthy to mention that calendar year 2021 prices for Victoria and South Australia are significantly higher than Cal 2022 and 2023. Overall, the market is still quite emotional and susceptible to news around the coronavirus and the prospect of further economic lockdown. In the gas market, well, the gas spot market is trading at historical lows, and there is some significant opportunity to optimise gas charges, especially through wholesale products. The retail market rates have not yet dropped as significantly as the wholesale market. The gas market presents, therefore, buying opportunity for those who have not signed longer dated contracts. Prices significantly lower compared to 2019 levels, and as expected, contracted prices for 2021 and 2022 remain subdued. However, prices start to look as though they're going to rise from 2023 onwards, indicating the expectation of the demand surge in the future or a reduction in supply, as lower prices may force some suppliers out of the market. Presently, certainly great opportunities to secure cheaper gas contracts, especially for 2021 and 2022. Overall, we anticipate a period of consolidation for the domestic gas market following the recent plunge in demand. And in the certificate market update, the LG prices are stable near the $40 mark, fluctuating between $41 and $38 per certificate. Good news for all of our customers who fix their LGC rates at lower prices. Energy saving certificate market remain unchanged following the recent rise in prices. BEECs and ESCIs currently trading at $35 and $26 per certificate, respectively. And finally, in the news this week, according to the AEMO, coal, which currently provides around 70% of electricity generation, will contribute less than a third of supply by 2040, could be forced out earlier than planned retirement dates as competition from renewables and carbon constraints render those plans uneconomic. By 2035, nearly 90% of power demand could be met by renewable generation during periods of the day. However, that will require up to 50 gigawatts of large-scale solar and wind to be added under the most aggressive plans to cut emissions, representing nearly all the current capacity of this market to be built in just 2 decades. Tasmania's ambition to become the battery of the nation has been given a huge boost with the green light for the $3.5 billion Marinus Link Bass Strait Power Cable project. The project is tipped to create up to 2,800 jobs, mostly in regional Tasmania. The AEMO, the market operator, has published its 2020 integrated system plan, identifying which major infrastructure projects should proceed in coming years. It identified 6 projects to be given priority, including the Marinus Link, 32 350 kilometre long high voltage cables designed to export 1,500 megawatts of renewable energy from Tasmania into the national grid. Have a good week going forward. That's it from us with the Market Wrap.